As a new investor or even a seasoned one, you might be confused as to where to focus your investments. Should you focus on growth stocks or dividend stocks for the passive income? There's so much chatter around which one is the best, and today I'm going to be helping you decide. Hi everyone, this is Camilla, the Focus Spender, and welcome to my channel where I teach you how to save money, get out of debt, and invest so that you can build wealth and leave a lasting legacy. Now, you know that all stocks are not created equal. There's so many types to choose from. You can choose from dividend stocks, growth stocks, value stocks, penny stocks, just to name a few. Ultimately, your goal as an investor is to make money, and how you do so will really depend on the type of stocks you pick. So in today's video, we're just going to be focusing on comparing and contrasting dividend versus growth stocks, the pros and cons of each, how you should decide what is right for you, and my personal preference / performance. This video is sponsored by Cover, which is an insurance app designed to get you the lowest car insurance rates without you having to spend hours and hours calling different insurance companies. The very first time I tried to get car insurance, my quote was over $400 for a used Honda Accord. We had to keep calling and calling around to get the rate down to a reasonable amount. But Cover users have gotten rates as low as $35 per month without the hassle of calling around. They will even spot you up to $250 at 0% interest towards your premium when you get insurance through them. Cover focuses on car insurance for younger drivers and people trying to build up experience and credit. So if you're in your 20s like me, or you have a teen driver driving up your insurance costs, you're going to want to check them out. To use Cover, just download the app, fill in your information, and they will do the shopping around for you with the major insurance companies. You'll get an advisor you can communicate with via text, so click the link in my description box below to try out the app. So let's start out by talking about dividend stocks. So a dividend stock is any stock that pays a dividend. Now, what is a dividend? A dividend is a percentage of profits that a company will pay its owners or shareholders in the form of cash. So let's say you own 10 shares of XYZ company and they're paying $1 per quarter in dividend. So that means that every 3 months you're going to get a payment of $10 or $40 for the year just for owning 10 shares of the company. So thinking about that, you can clearly tell what the first pro is. And so the first pro is passive income. So you can use that passive income to reinvest back into the company so that you can buy more and more shares and get more and more dividends. Or you can use that as actual income. So let's say you've retired or you have just stopped working for whatever reason because you have this massive dividend portfolio. And now you can just literally live off of the dividends that you're going to be getting paid out per month, per quarter, semi-annually, or annually. Another pro of dividend stocks is that they're typically value stocks, meaning the price of the share is lower in comparison to the value of the company. So the stock isn't going to be that expensive to own. So it makes it a lot easier to get into the company and purchase shares. And they also tend to historically outperform growth stocks. So these are usually pretty healthy companies that even though they're not using all of their profits to reinvest into the company, they have to make sure that they're healthy enough to pay out the dividends. So they're going to really still focus on performance. Now, some cons of dividend stocks are the fact that you're kind of limited in scope with the types of companies that do tend to pay out dividends. So I'm not saying that you're never going to find dividend stocks in every single industry in the world, because I don't know that. But in terms of the types of companies that do pay out dividends, they're typically limited to utilities, banks, and consumer goods. So there's just less diversification, and that's never good for a portfolio. You always want to have a highly diverse portfolio. So if you're limited in scope with the types of companies, you're just putting yourself at a risk. And another con thinking about your long-term strategy, especially if you are someone who's older and you're thinking about doing this in retirement, is that just being invested in stocks is just inherently more risky than, let's say, bonds or some other type of fixed income that you can rely on. So using this money in your retirement, the older you get, the riskier it will be. So let's talk about growth stocks. So a growth stock is a share in a company that is anticipated to grow at a rate significantly above the average growth for the market. These companies generally do not pay dividends, but there's always exceptions to the rules, and they use their profits that they earn to reinvest right back into the company so that they can grow their company at a rapid pace. So these companies are really focusing on becoming highly profitable and growing really, really fast. Now, as an investor, for you to make your money, because you're not getting paid dividends, you have to sell your shares in order to make money via capital gains. So let's think about the pros and cons of growth stocks. The main pro and probably the one that I'm just going to focus on with growth stocks, are the potential for making a lot of money, hopefully kind of fast, but just making a lot of money in general. So when I think of growth stocks, honestly, the number one stock that comes to my mind has got to be Amazon. When I looked up the price today, Amazon was at $3,573.63. That's insane. That is insane. Now, if they were a dividend company, if they had always decided that they were going to pay out dividends, there's no way that their price would be that high. It would be much lower. So you would be getting your profits that way. But for them to grow as a company, when they became profitable, they just had to keep reinvesting and reinvesting back into the company as opposed to paying out dividends. Now, cons of growth stock, again, looking at their price of Amazon, has got to be the high price. They tend to just be higher price companies than dividends. So in terms of getting into them, especially if you're kind of late to the game, it's just going to be a lot harder. A few more cons are the fact that your only opportunity to make money is when you sell, and they're definitely subject to sharper declines in price, because when we think about, the types of companies they are, people are really going to be focusing on their earnings and their profitability to know if they should be buying the stock. So if they have a bad quarter, they're more likely to face a sharp decline. So what should you pick in terms of your portfolio? Do you focus on those dividend stocks? Do you focus on those growth stocks? Well, honestly, it really just depends on what is your long-term strategy, particularly in retirement or maybe just right now in your life. Are you looking for that passive income to either supplement your lifestyle or to completely pay for your lifestyle? And if that is the case, then you definitely want to have a portfolio that is more heavily focused on dividend stocks so that you can get those quarterly dividends, you can get those annual dividends. I should warn you though, just because I use $1 per share as my example, that is really nowhere near how much the average company pays. They usually pay some type of percentage, whether it's 9%, 1%, 0.5%. So a lot of times when I get dividends and I look at how much they're paying for the quarter, because it's going to change, they might be paying 25 cents. So you really have to have a lot of shares in the company to start making a lot of dividends. On the flip side, if you're someone who really is I just want to buy low and sell high so I can make a lot of money, well, dividend stocks are not for you, because those stocks are not going to just jump up in price overnight. Growth stocks are. So you're going to have to start looking for growth stocks that have that potential of growing high. So what is my preference? Well, my preference is diversification. I don't want to be stuck with any one type of anything. I don't want my portfolio to be nothing but dividend stocks, nothing but growth stocks. I need that mix so that I can feel a lot more secure. So I've invested in Vanguard Dividend Growth, which is a mutual fund offered by Vanguard. And I'm not telling you to go out and buy Vanguard Dividend Growth, but I'm telling you that there are options for you. Even if you just do a quick Google search like I did, you're going to find other mutual funds and other ETFs that have a similar makeup. So I found SPDR S&P Dividend ETF, T. Rowe Price Dividend Growth, which I think I might actually own, but I have to look that up for another day, and Vanguard Dividend Appreciation, which is also an ETF. And the reason why I'm saying ETFs is because I know with mutual funds, there's just a higher barrier to entry. Sometimes you can't get in without having a minimum deposit of $1,000 on the low end, or $3,000 or $10,000. Though with ETFs, you're literally just looking at the share price, and you can buy that tomorrow. You can buy it on Robinhood, you can buy it on M1 Finance, you can buy that whenever. So that is what I like to do. It has done really, really well for me. I've had this mutual fund for, I don't even know, 8 years, 10 years, and the value has just always grown, and I've always gotten really, really good quarterly dividend payouts. So think about something like that, or think about an ETF. And if you want to just build it for yourself, because you can create these types of portfolios for yourself. You can use a company like M1 Finance. I talk about M1 Finance all the time. I have a ton of videos on it where you can build your own portfolio, and you can pick out, let's say, 10 dividend stocks and 10 growth stocks so that you have that well-balanced mix of passive income and growth. I hope you like this video, and I will talk to you guys next time. Thanks. Bye-bye.